Okay, what are the qualities? The qualities of the financial information, okay? Because we said that financial information is a service that provided by finance department, okay? So this service has some qualities, okay? Some qualities. We have two types of qualities for the financial information. We have what we call it the fundamental qualities, okay, which is the most important qualities that must be provided with the financial information, okay? And we have some enhancing or enhancement, which is not important, but if it's included, then it will be okay. The information will be better, okay? Okay, so what are the fundamental quality? Okay, then we have under the fundamental quality or under the fundamental qualities, enhancing means something optional, not so important, but if it's there, then it will be better. It will be good if you have this type of qualities. Okay. Okay. The fundamental qualities have two types or two levels. Two levels. The first level is the relevance. The relevance. Okay. That means the information that the financial information that's provided to the user must be relevant to his request. Okay, relevant to his request. If I ask somebody to give me a book about accounting, for example, okay, and this guy provide me or gave me a book about computer science, then he gave me a book, okay, even though he gave me a book, but he did not give me a relevant book. He gave me a book that I did not request. He gave me a book about computer science, and I request a book about accounting. So the book that he gave me is not relevant or irrelevant to my request. So the information that are requested by the user should be relevant to his request. Okay, so how can the information be relevant? By three things. The first thing is that it has what we call it predictive value. It has a significant value to the user or to the requester, and it has a value. Okay, and also it has what we call it confirmatory value. Confirmatory value, that means the information must be accurate, must be real information, not false information. Okay, I can test whether this information is true or false. Okay, this is the second specification or second type of relevance here. Okay, and it must have what we call the materiality threshold. The materiality threshold. The materiality threshold, which is the level of details that I request. The level of detail that the user requests about the financial information. Let me give you an example here. I said that the owners of the company usually think of the profit. Okay, they think about increasing the profit of the organization, and this is what they are targeting. They want the profit to be increased. Okay, and also they want the cost to be decreased. Okay, then if the owners request some information, some financial information from the finance department, then the finance department should provide them with relevant information, relevant financial information. That means the financial information that the finance department provide to the owners must have value, okay, and must be accurate, and also have required detail. For example, it must have the profit for each product. For example, if we have 2 or 3 products, then the owners want to know about the profit of each product, and also they want to see the costs for each product, plus also they want to see the costs for each organization or for each department, so this is the meaning of relevance here. Okay, the information should be relevance to the user or to the man who requested those information. So the next part of the fundamental qualities, which is the faithful representation. Here, this is a very important quality that the financial information must have. Okay, the financial information must have the faithful representation. What is the meaning of faithful representation? Faithful representation, that means the information should be accurate and should be free from error. There should be no errors in the financial information that's provided by the finance department, and must have what we call it the completeness. It must be completed. Completed means it should not have gaps. For example, gaps between the numbers that included in the financial information. Okay, and inshallah we will see in the when we inshallah discuss the balance sheet that there are 2 numbers in the balance sheet that must be equal. The completeness means that the information or the financial information should be completed. Neutrality means that outdated, for example, or should not have outliers. For example, sometimes when you write, for example, the cost of producing each product, by mistake one of the employees put a number that does not give a specific meaning. By this way, this is of course an error. Okay, but we can call it is not neutral or outlier number. So this is the second fundamental quality that the financial information should have: the free from errors, neutrality, and completeness. Okay, so these are the fundamental qualities. The financial information must have these qualities. Okay, here we have some enhancements. If it's there, then it will be good. Those are, for example, the comparability. Okay, if the financial information that provided have 2 periods, for example, information of this year and information of last year, and the reader of this information can compare between last year and this year. So this will be good. This will be better. Okay? If you can compare between last year and this year, or if you can, for example, compare between 2 companies. If you have 2 companies and you provide the financial information for those 2 companies, okay, in order to compare between those 2 companies, then this will be better. This will be good. The timeliness means if you provide the financial information every month, for example, every month or every quarter or every year, or sometimes every week, for example. If you follow a rule of time, if you provide this information in regular basis, every month or every quarter or every year, then this is what we call it timeliness. Okay, the verifiability. The verifiability means if the reader of the information, if anyone read this financial information, can verify if this information is accurate or is not accurate. For example, if you put a reference to this information, then it will be better. That gives the reader indication that the one who provides this information is sure about the information. He is sure about this information and he knows exactly what he is doing. Then this will be good if it can be verified. And finally, understandability, okay, which is, in my view, understandability, in my view, it's one of the fundamental qualities, because if you cannot understand the financial information, then that means the financial information is not relevant, if you cannot understand the financial information. But here they mean the more understandability. They mean, for example, if you put in the financial information, if you put some terms like ROI, or for example IRR, and you explain what do you mean by ROI by saying down in the report or in the financial statement, you write that ROI refers to return on investment, for example, or IRR refers to internal rate of return. That means, okay, these are the different qualities that the financial information should have in order to be good financial information. Financial and management accounting. When you compare between financial accounting and management accounting, you compare between them in these 6 criteria. Nature of the reports produced. Financial accounting provided to the people outside your organization. Okay, so this is the nature of this information, the financial accounting information. It's provided to outsiders, to the people who are outside your organization. Whereas the management accounting information provided to the people of your organization, to the people inside the organizations, like for example the managers, some of the employees, the board of directors, the CEO, anyone who's requesting information from your organization. We call this information, we call it management accounting information. Okay, so this is the nature of reports produced. The level of detail. Usually management accounting information has more detail than financial accounting information. Financial accounting information, because it's provided to the people outside your organization, you don't want those people to know exactly the details, some of details inside your organization, so that you provide the financial accounting information in aggregation, in high level of detail. Okay, no specific details inside the financial accounting information. Whereas the management accounting information depends on the level of information that was requested by the user, okay, the user of this information. So management accounting information has more detail than financial accounting information. So this is the level of detail. The existence of regulation or regulations, okay, usually management accounting information does not have certain regulations. It's based on the requester. For example, if the operation manager in your organization requested some information about the sales of a certain product, okay, then there will be no regulation for this financial information that you provide. No regulations. Based on his request, you can provide him with the type or the detail that he requested, with no regulations. whereas the financial accounting information has certain rules, certain regulations that apply to any financial accounting information provided to the outsiders, to the people outside your organization. So financial accounting information has some regulations. Management accounting information does not have any regulations. Reporting interval, the financial accounting information must provide it, for example, in monthly basis or quarterly basis or sometimes yearly basis. That means in every month, at the end of every month, you have to provide or you have to produce certain financial accounting information. If you did not produce this financial accounting information, sometimes you will be charged by the regulation, for example, the authority of financial market. So the financial accounting information must be provided in certain periods, whereas the management accounting information does not have any interval. Anytime the employee, any employee or manager requests some information, you can provide him with this information. Okay? Time orientation here, time orientation means the period inside the financial information. For example, if you produce monthly information, monthly financial information, okay, you can make it as week by week or day by day. Okay, at the end you have 1 month, you have financial information for 1 month. Okay, this is applicable only for management accounting information because it's a type of details. Okay, when it has certain details, you should not provide the financial accounting information with this type of details. Okay, so here time orientation depends on the requester, but here in financial accounting information, no time orientation. No, for example, it can be monthly or week or quarterly or yearly, without any less details, without any deeper information. Finally, the range and quality of information related to the details of the financial information that's provided to either to the people outside the organization, what we call it the financial accounting information, or to the people inside the organization, which is the management accounting information.